Another thing that's crossed our desks here that's pretty interesting is that corn market. Yes, May is going to be, continues to be, or looks to be a little bit of a slower time. A lot of the farmers are out in the fields. That happens, so the volumes will kind of get depressed here, or at least we expect that to be the case. And what we don't like to see, volumes get depressed with the prices on the board at this level. The farmers are kind of hurting out there. We're in a 50-cent box, right, where between say 386 or down to 336, and obviously we're trading at the lower end of that. That kind of is something technically we have to keep in mind. If you're looking for your worst case scenario, you could probably see corn having a worst case scenario of another 30 cents lower, but don't get too bared up here because a lot of times these things can reverse fairly quickly, and a couple of instances would be some sort of weather event and or China, so keep that in mind. Also, there is some bullish news kind of leaking into the system. Weather's been wet, and again, that goes back to Mother Nature. It hasn't really caught the prices on fire yet. We had more news today that we're behind the 5-year average, and generally speaking, the longer that it takes to get corn in the ground, the less of a yield you'll have, and that's pretty much that's not generally speaking, that's an absolute fact. So the longer it takes to get it in, we're going to start to take the top off the yields for the end of the year. Now, no, there's never been a year where we haven't planted corn. Obviously, we're going to get it in at some point in time, but that's also something we want to keep an eye on that could stem the tide of these worst case scenario losses and turn the board around here and start to see corn rally from these lows. And then lastly, the funds have been part of this as well. They've been short corn, and they haven't been given a reason to get out, and they're adding to that position on a weekly basis. We'll see what happens on Friday when we come out with the next report of that managed money short, but they're the ones right now in control. There hasn't been enough news out there to scare them out of their shorts, and a lot of times it'll take something like the 50-day moving average or another technical indicator, the 100-day moving average, to get them out of those positions, and then that's when you're going to see those markets rally, because the funds are so short they're going to have to buy a lot of futures back, and they'll cannibalize themselves on the way out. So that's going to be another good day for the longs, but when is that going to come? Well, we need to see what the pain threshold is, or where we sneak these funds out of their shorts. So keep an eye on that. Funds have been short, they're still getting paid, they're still in control, but once they start to lose control, that'll also end up being a decent bull rally. So that's it from here. I'm Scott Shellady on the CME Group floors in Chicago.